Welcome back to Level Field's weekly news wrap. Last week was packed with massive wins in the market, and our AI spotted some game changers you won't want to miss. Before getting to those, let's talk about great jeans. The Sydney Sweeney denim ad lifted American Eagle shares to new heights. Last week's earnings doubled forecasts. Management now projects operating income of $255 million to $265 million versus $176 million consensus, with same-store sales set to turn positive in the second half. American Eagle stock jumped 26%, and the CEO credited the revival from the Sweeney and Kelsey campaigns. A little controversy and a lot of cleavage was enough to put American Eagle back on the map for consumers. If you're into biotech breakthroughs and AI chip deals, buckle up. These stocks surged big time following Level Field's AI alerts. First up, Arrowhead Pharmaceuticals skyrocketed 20% after sealing a whopping $2 billion deal with Novartis for their neuromuscular therapy program. We're talking upfront cash, milestones, and Arrowhead stepping up as a powerhouse in RNAi therapeutics. Novartis gets a foothold in rare diseases. This is huge for investors eyeing innovative biotech plays. Next, VTV Therapeutics exploded 21% in just one day. Their diabetes drug casigliotin snagged FDA breakthrough therapy designation, fast-tracking development and reviews. This shines a light on unmet needs in diabetes care, and small-cap biotechs love these regulatory boosts. Investors went wild. Could this be the start of something bigger? Wrapping up the trio, Broadcom jumped 9.4% on a massive $10 billion plus order from OpenAI for custom AI chip shipping in 2026. This positions Broadcom as a real rival to NVIDIA, helping OpenAI dodge supply issues and supercharge their models. The chip wars are here. These are the kinds of insights Level Field's AI delivers straight to you, spotting opportunities before they blow up. If you love this, hit that subscribe button for more and stay with us as we get into the macroeconomic data next. So where are we now in the market cycle? Markets are heading into September, carrying a volatile mix of weak data, dovish Fed bets, and rising geopolitical tensions across the Americas. Funds are shifting into their seasonal rebalancing phase, and after NVIDIA's blockbuster earnings failed to ignite another rally, money rotated out of tech and into safer assets. A softer jobs print last week pushed unemployment to its highest level since 2021, all but locking in expectations for a Federal Reserve rate cut in September. Markets are now pricing in 3 cuts by the end of the year. Bonds surged, yields fell 10 to 15 basis points, and gold hit a new record high at $3,600 an ounce. But the picture isn't entirely clear. Inflation is still sticky. The next CPI report, due Thursday, is expected to show core prices rising 0.3% month over month, still above the Fed's comfort zone. If inflation runs hot again, it could limit how deep the Fed can cut without losing credibility. Policy risks added to the mix. On Friday, an appeals court ruled against the administration's sweeping tariff program, once projected to raise more than $500 billion a year to help offset tax cuts. If tariffs are struck down, deficits could widen, U.S. credit standing could weaken, and Washington would lose a key fiscal lever. At the same time, the White House signaled new semiconductor tariffs could arrive shortly, though firms pledging domestic build-outs, like Apple, may be spared. The U.S.-Venezuela standoff escalated after Washington struck a suspected drug boat and deployed F-35s to Puerto Rico. Caracas answered with jet flyovers and militia mobilizations. While drugs were the public justification, Washington's broader aims were clear: securing energy supplies, countering China and Russia, and reasserting control in the region. Safe haven demand surged in response. Gold, silver, and Bitcoin all climbed as traders trimmed stretched equity positions. Oil, however, sank after OPEC Plus raised production into soft demand, leaving energy equities lagging even as defense names caught a bid on geopolitical headlines. By the end of the week, markets were little changed after 2 sharp down days bookended a midweek rally. The S&P 500 slipped 0.1%, but still logged its 19th and 20th record closes before fading. The Dow fell 0.2%, and the Nasdaq dropped the same. Semiconductor stocks dragged on tech after NVIDIA delivered a cautious revenue outlook. Healthcare and consumer staples outperformed, while gold miners, home builders, and solar names led among industries most sensitive to interest rates. Oil drillers and semiconductors ranked among the weakest. Gold and silver ETFs gained about 5% on the week. Looking ahead, markets face a heavy data slate that could reset expectations for Fed policy. In the U.S., CPI and PPI inflation prints will take center stage, alongside the annual payroll benchmark revisions after several months of weak jobs data. Durable goods orders will be scrutinized for tariff impact, and the University of Michigan survey will offer an early look at sentiment. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Level Fields newsletter. It's fast, free, and built for investors who don't want to miss a beat. Follow and subscribe for more. Level Fields Elite Investing, Effortless AI.